The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. The Dow is sitting right on the 200-period exponential moving average at 26,079. It went down to 26,035. So it's come a little bit off. If ever there was a moment where some kind of a bounce should be forthcoming, this is that moment, because it has just been red candles for days now. A couple of things. Let's do this. Let's go through this very slowly. I'll go through it. Where is it? Let's go to the Dow INDU. So I've been talking to you about this for weeks, actually, and I've been saying there's an exact match between the high that was made right here on the 23rd of April for subscribers to my opening call. We went short the day before, then short the Dow. Ran to 26,695, and then it went sideways as these two moving averages here. Let me see if I can make this a little bit bigger. Make this bigger, and just for purposes of explanation, I'm also going to make these guys nice and thick. So style, make it really much bigger. And when we go to the slow, well, no, that's good enough. Yep, that's right. So what am I doing here? Fast, slow. Let me just see if I can do this. There, okay, good. Now let's go to that one and make that one nice and thick, and it'll be much easier to see. So that's the slow is there. And let's make this one much thicker because this is, okay, here we go. So you see these moving averages, the black line, thick black line, and the green line. After I got my sell signal based on the ChapmanWave methodology, there was a little U-shaped pattern and a failure to make a new high. It wouldn't have made much difference if it had, but anyway, there was a failure. And then what we got is, you got sideways trading day. So from the high, 1, 2, 3, 4, 5, 6, 7, 8, 9. It was on the 10th day. I'm going to put this in because every day I show it, I've got to count these on bars. 10. I'll just put a 10 in right there. So on the 10th session, the stochastic, I call it a stochastic, I'm sorry, the faster moving average, the 9-period moving average, went under the 14-period moving average, changed from green to pink. That's the way I designed it years and years ago. And what happened was, the next day was an inside day. The following day had a much sharper low. When we got the buy signal, the exact day of the buy on June the 3rd, it took 1, 2, 3, 4, 5 days, put in a 5 right there, before it crossed positive, but a lot of points. When we got the sell signal, 7 points from the exact top, went short of the exact top. Remember, I call this bad news cloud cover. You need a bad news cloud cover with the volatility index starting to rally sharply and holding. Remember, 1617 says you'll have intraday sell-offs. Goes to the 18s and 19s, you're talking about a sell-off that says double-digit closes should be triple-digit closes. Goes into the 20s, says you're getting closer and closer to some kind of a reversal. You don't have to be guaranteed it's going to happen in the next day or two, but you're getting closer. I'll talk about that VIX when we get there. So now what we've got is the exact little tiny doji high, the all-time high, 30 right there. That was on the 16th of July, 27,398. I should have memorized that, of course. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 12th day is where it crosses negative. So let's put that in, 12. Comes down to the bottom and makes an H pattern that went to a lowercase m. And I said, this is going to be tough for me to give a buy signal because either it's going to break down to a lower low, this is what this pattern does, or it just has to immediately power right through the high of the lowercase m formation or H formation, and that says it's going to go much higher. Well, it did that, and what did it do? It went all the way to not the all-time high. It went to 27,309. Or was that a 6? 6. And then I said, we got to start expecting a bad news cloud cover. We tried to short the very next day. We just missed it, and it pulled back, but we did get it about 120 points off the all-time high for subscribers. We shorted. We're in that position now. And what did we get? We got the 13th session. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 sessions. Actually, I noticed this yesterday. The Dow was a little slow. Some of the others did it. This is actually the 14th session. Look, only now are we getting the official crossover. So I'm putting in 14. Very unusual to take that long. And what I said to subscribers to my opening call, be careful, because this is when you get the most powerful moves. If we replicate what happened on the 12th and 13th day of the sell-off after the high, July 16th all-time high, that was a powerful move. And then you just kept going down, 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 down. Will the same thing happen now? Well, that's a big question, because basically we've got an inside bar on a very big candle going from a lower high, all-time high was July the 16th. The lower high was right here on the 12th of September. And so far, we've got a higher low. But the day is young, the week is young, the month is young. Let's see what happens. But the pattern is arch formation, cup formation. Why do I mention that? Because in my methodology, what we're always looking for is to get buy signals that go to buy modes. And within that context, let me just show you this before we go to a break. What we have is arch formations or cup formations or a combination where you go straight down, you try to rally, you remember that lowercase h that I was talking about, and then make that red, because if you take out the left side low, you can go even lower. On the upside, if you take out the left side high, you can go higher, that's why it's green. And I always say at the fourth highest peak, peak D, is where other things can happen. Not sure what I'm going to do about the scratchy throat during the show. Anyway, so what we got now is a really ugly candle. Day is young, it could be 1,000 points down. Remember, I have an expression, we haven't seen this for a long time. It used to be where if at midday Eastern time, if the market was in a certain conjunction, if it was going, has a certain up move or a down move with the technicals in a certain formation, I would say we could double the noontime price to the upside, or we could double it to the downside. Gee, I don't know if we can do that. That's a huge, ugly candle. Usually at about this point, you start getting support. But just be real careful. All I can say is we're down 524. If at 3 o'clock there's been no rally to like only down minus 375, instead we're still stuck at minus 480, and the VIX refuses to go down. VIX right now is at 20. I'll show you in a moment. Be careful of the close. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow is down 521. S&P's down 55.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're back. Dow's down 521, S&P's down 55. Okay, so if you're looking at the QQQ, I was asked if I could show a difference between the Qs, that's the index 100, and the comp. Now, have I updated my comp index? Yes, it's going to be right there. So I haven't quite updated it, but this definitely has to be a down arrow for the weekly chart. So I need to talk about monthly charts, but I hope I need to do that maybe when I'm finished everything here. Let me just check to see what I'm doing wrong here. I've got 3. Oh, I don't even know. Data 1, data 2. Data 3. What am I doing here? Close, remove. I don't know if this is right. Let's just see. Close it. No, I've messed something up. Oh man, don't mess anything up. No way. Let's just go GE. Oh man, calculating strategies. I don't need this. I just messed up. Data 3. Oh, maybe make that GE. Format. No. I'm sorry about this, folks, but I just need to get this right. I do not want to have to re-download anything. Close. Okay, good. Okay. Oh, that's where it went. All right, let's get rid of this. Remove GE. There you go. Okay. So what we're looking at here, I didn't want to do GE. I want you to do the comp index, CMPX. There we go. Okay. Is this all not notated now? Did I just do something? No, I didn't. Yes. Okay. The reason why it was important to use the QQQ is that I had the strangest thing. There's no other way that A, B, C, D. Yes, there is. Okay, so that was an alternate count. I got this right. All right, let's just call this was a D right here. There was an alternate count. And that's the reason why it took a little time, because there was a period where there was an alternate count. And then I said, oh, this just has to be. What are you doing, mister? There you go. All right, now let's just get this right. That is an alternate count D. Get rid of that. Edit. T. Okay, whoa, that took a long time. So let's put a down arrow right there in the comp. This is now the comp. This is the very broad comp index. The question is, a lot of questions coming in. Could I, let me just find this. Yeah, comp. Please chart the comp 3,100 stocks versus the NDX 100. Okay. Now, I would be able to put it, I could overlay it. I just can't do it right now because I have a little problem going on. I absolutely do not want to mess with this. It's been working very nicely for a little while, and I do not want to take the chance of doing anything stupid. So there was a triple overlapping wave. We went to a C, and then I went to a D again. Now it's pulled back. Okay, so have a look at this pattern in the comp index. You see that the 200-period exponential moving average has become extremely important support because it's held, even though we went down below in June, it just immediately ran up very sharply, went down below 7,300. And then ran all the way to the high of about 8,300. I'll give you the exact figure of the comp index, and that was 8339. Let me put that in the 26. 8339. 9. Was that 9? No, it wasn't. It was July 26. July 26. And then it comes down to the 200-period moving average in the 7,600s. Then it runs back up into the 8,200s, makes a double top, and now it's down below the 200-period, the orange 200-period moving average. Have a look now at the QQQ, which is the NDX 100. A little bit better chart. It, too, didn't make an all-time high. After that July high of 195.55, it went to 194.71 on this. Oh, that's exactly the pattern. This is the alternate count. This is the ChapmanWave instant restart. It's called right there. It's an unconventional flat base restart. Now, what's really important is that we're at 183.51 and 183. If I can get that right, I'll tell you right now what it is. There it is, 182.52. A close below 182.52 means that this is the first time since June that the 200-period moving average has been pierced to the downside. And I have to mention now I can do the monthly charts. You see the monthly chart? Ugly red candle 2 days into October. About right on the 9-period moving average of the monthly chart, 179.46 is the 14-period moving average. MACD deflected lower. Stochastic still good at 86%. In the weekly chart, we've broken key support. You've gone from, this is the lowercase h. Remember we were talking about this before, straight line down. Let me just do that again for those of you new to my work. This is the pattern that we're looking at. In my CD introducing the ChapmanWave methodology, I talk about the dreaded H, the lowercase h. When it takes out that left side low, can go quite a bit lower on the upside. Same thing with the breakout to the upside. So let's get out of this. And this says that if 181 is taken out as support, be careful. You could retest that August low. I think it was August or July. That was the August week of the 9th low of 179.20. So this is such an important moment. And one of the reasons why I say to subscribers, we're raising cash, we raise stops on all our positions, almost all our positions. Excuse me. So we have very little on the way of the long side left now. We tried a short today. We missed a really perfect short opportunity. That's the way it goes. But we still short the down. We short the SMHs. Look at this, the SMHs. Look at this breakdown. Leg D to the downside, and yet it's still, there's the daily chart, doesn't look great, but the weekly chart's holding okay, monthly chart's not too bad. The support will be this trend line right here, the ChapmanWave falling axe, a declining cone with expanding lower highs and much lower lows, and it says over the next couple of days, 113s is going to be absolutely key and imperative to hold if there is a pullback, a further pullback from here. So this is, we're short from 120, just over 120, it's trading at 160, no big deal right now, but this is leg D, and when you get many clusters of legs to the downside with troughs that are forming, that sometimes sets the mode for a little bit extra to keep doing that. It's those huge single leg down moves like we had trough A, back going to the low of June, from the high of April, from 120.71 to the low of, what was that, 97, the 97s, that's where you can get a much bigger move to the upside, like a single leg down. Okay, so that's the comp and the S. So the comp is a little weaker. The 3,000 stocks a little bit weaker than the 100. Of course, because the 100 are the 100 best. Now what we're looking at is that the SMHs are also falling back. The IWM is at this point down 1.48%. It's one of the deeper corrections. It's in leg E. It's given back almost all the gains. 144.25 was the low. That was back on the 24th of August. It's at 146.18. Look at this. Keeps making these arch formations with lower lows and lower highs. We'll see if this is going to continue. And this monthly chart is really making that dreaded H pattern. This is a moment that I would not... There's no sense in having any bravura action right at this moment to step in front.
Since 1984, Basil Chapman has been using the ChapmanWave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the ChapmanWave sequence. Using the ChapmanWave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. David White has had some great trades in his daily trading newsletter, The Path of Least Resistance, and now's a great time to sign up while saving 25%. Just use promo code OPTIONS at checkout and you can save 25% off your first month. And this offer still comes with a 30-day money-back guarantee, so you have nothing to risk. Dave has had some great options and equity winners over the last couple of months. If you'd like to see for yourself the types of option trades he recommends for his subscribers, then check out all the details on the front page of TFNN.com. This offer only runs for 1 week and ends this Sunday, October 6th, so don't miss out. Head on over to the front page of TFNN.com right now for all the details and to start your 30-day money-back guarantee subscription to the Path of Least Resistance today. Remember to use promo code OPTIONS at checkout. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back. So a couple of questions, a lot of questions, a lot of statements, a lot of questions. But let me just say, David White, Path of Least Resistance, has done a fantastic job with options lately. He's just really nailed it. Has a special going on right now. Check out the front page of TFNN. I think it'll be worth your while. Here we're looking at the E-mini. This is with ChapmanWave notations of support and resistance. What I was saying before, for quite a while, I even showed it here during my show, I said, look at all these green resistance. They're actually the wrong way around. It should be red, but red, it just interferes with the actual charts themselves. So it's in green. and there were a ton in the E-mini, and we went right through those support levels. Look, even here, there are much higher ones coming up for the next big move to the upside. It will happen. I don't know when yet, but up in the 3,077 to 3,150 area for the S&P targets. And then look at the tremendous resistance in the monthly in the 2983 area, and that was about 3,000. 200 for the upside. So we'll see what happens. But look, I can go through them all. Look, Dow. Look at all the cluster of resistance levels. We went right through the support. There's nothing here in the way of serious support until 25,526. If 26,015, the 10-minute support level gets taken out, I don't even have anything in the 120-minute chart. Doesn't mean to say you can't bounce. I'm just saying it's just not there. And yeah, on a very short term, we really should be bouncing from here. The S&P cash 2880. Very important support. We're at 2884. The low today was 2882. Let's see if we can have a bit of a bounce. We went through the 2918 level like a hot knife through butter. QQQ 19,000. Sorry, 191, all the way to 194, 195s. Ton of resistance levels. We just went through 184.39 support. That's going to be a short-term basis. That'll be your next resistance. We should take that out quite easily in the next day or so for a bounce. But 176 is next for key support. That's a lot of points. That doesn't have to get there. I'm just saying that's what's written. So it just goes on and on. Look at gold. Gold had a lot of resistance levels, and it took out it tried to go just a little bit above, and then it fell, but it took out support levels. And 1469 was a major daily support. Now we're trading at 1506. Very nice. Now 1507, 1508 is a 10-minute strong resistance level. Just thought I'd go through those. Look at the TLT. The TLT is 143.50 resistance, 146.33. And then 150.34, 136.63 was 136.33 was the key support, and it actually went right down there about 2.5 weeks ago. And 143.83 is the daily support. We're trading 144.06, and we've gone through the resistance levels in the 120. There's no weekly resistance levels, and we went right through the ones in the monthly chart. So this says, be careful. You've got some overhead exposure to the upside, not resistance, but exposure to the TLT. What's my thoughts on SQ? Let's do that. Got a couple of questions coming in. Oh, VIX index trading at 20.90, up 2.34. That's a very big move for a one-day move, a two-day move going from the 16s to the 20. Something's up. If it holds on the closing basis today above 19.50, that says watch out for tomorrow. If we get a nice turnaround today, the Dow only closes down 370, and the VIX pulls back to the 19.10 area. It says, okay, a little bit of a breather before we get the next flurry of bad news events. Remember, I had that bad news right here in my, right here. Bad news cloud cover. You've got to have a cloud cover that's not just a one-off. It has to be consistent day in, day out, day in, just continuous. Okay, SQ is square. Oh, I put it in the wrong one. Let's just do that again, INDU. And now we can go to square. I want the 3 time frames, as I always do. Ever since I started here at TFNN, way back in the 2003, 2002 area. There. So Square had a very sharp pullback. It had a nice bounce from the 54-ish level all the way to the 63s, trading right now at 60.05. I think this is the start. Remember that lowercase h, the dreaded H pattern in the monthly chart? Give this a little time. I think the fact that it had a good 1, 2, 3, 4, 5-day rally last week into yesterday is a good sign. Please keep me posted. Just keep asking the question about Square. If you are long, and you're long from underneath 58, I'd say be real careful. If it closes under 57.30, it's probably going to retest the low. If it can go sideways here, it says, hey, you know what? Some of the really beaten down stocks, I would say 101 to the 54s, just about cut in half and then running back again. no, to the 50 level, yeah, cut in half, would say, yeah, looking for an entry point, just have a little patience. And what I'd said for a little while now is those favorite stocks of yours, just step back a little bit. If you want to start nibbling very soon, just a little nibble. But I'm not sure we've got the real buy yet until we get that VIX reversal. It might come within another few days, maybe by Friday or Monday at this rate. But I'm just going to say to you, I would keep in mind what happens in the 58.50 to the 57.70 area in square, trading at 59.30, down 2.33, down 3.78% on the day, much more than the actual indices. So it's still vulnerable. It's a stock that I'm looking at, Square point of sale software, to manage your receipts, you know, wherever you go, especially you go out to a fair or you go out street vendor, they're all using like Square products. So yes, I like it. This is a very tricky time to putting in buys that aren't short-term, that are what you would like. I got a feeling S&P, you'd like this more as a median, kind of intermediate term, maybe 4 to 8 weeks trade. We're just too vulnerable for that. As a short-term trade, just give me a yell when you see it trading at 58.30, 58, somewhere around there. Let's have an assessment. If it suddenly moves to the 61.80 area, maybe it's already put in some kind of a low, but just the market says, be really careful right now. All right, good. I'm patient, thanks to Dave White. Yes, very good. David has a way of also just holding back until he sees the whites of the stock's eyes. I think that's the way we can put it. Okay. Next thing we're going to be looking at, yeah. So I was asked, what about your ChapmanWave Dow Quartet so-called index? Well, Caterpillar had a fabulous run, went from 111 to 134, having a little problem here at 119 on the 200-period moving average. That's what I mean. When you come back from these Eiffel Towers, single leg up A and then a pullback, you've got to be careful like Square. So be careful at 119. I just give it time. IBM holding a lot better. It actually made a leg D and now a peak D. Keep your eye on IBM. I think that the whole cloud thing is starting to improve for IBM for this is the first time I can say that in years. I'll be back. We'll talk about it in a moment. The Dow is down 538. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Scott. Scott, I did see your name, and I was in contact with my engineer to say, I'll take you right away. But then now you're gone. Scott, call back. I need to speak with you. Looking at USX, it's down 10. It's down at 1077, down $1.16. I'm not sure if that's exactly what you want to look at. Now you've got to say to yourself, just for the moment, it's out of play. It'll be back in play, but the way you do it is the best way. You get in, you have your target price, not necessarily your target profit, not necessarily the price that it needs to be. That's perfect. Well, let's talk about it if you can get back online. Meantime, I had a question about, could I pull up CGC? CGC is the cannabis stock, if I can just get it in the right place, right there. CGC. 21.54, it's down 29 cents. CGC's Canopy Growth, it was once at 59.25. It's been more than cut in half in the monthly chart. There's that dreaded H. Look at this. Let me draw it in for you so you know exactly what I'm talking about. The weekly chart, you can see, went underneath the 200-period exponential moving average. And this is the very first time that I'm saying to myself, I've been looking at these over the last few days. I think that if there's another couple of days of, that's why I typed the CGC in the den instead of over there. If there are another couple of days of weakness in the market, many fund managers will be looking for alternative instruments, and that's why, let me see, CGC, what else is there? Let's look at, I haven't typed it in for so long. GWPH. I'm sure I always remember the symbols. GWPH. Yep. GW Pharmaceuticals, medical marijuana. Also, the huge arch formation at 108. It was once upon a time. Why didn't I ever write the price in? How ridiculous is that? 196. I wrote that in. 196 round number high. I love round numbers. 196 round number high. And that was, I think it was in May of this past year. And it plummets down to 108 this morning. This morning's low was 105. I would say that almost was a 48% correction. This is in May. So let me put that in. High 5, 2019. I think that these are getting closer and closer to at least a bounce. I don't think they are in for the big move just yet. So 108 right now, down 285. It could bounce, but if it bounces from 108 to even the 9-period exponential moving average of 118, yeah, I just gave that up in a second. It went from 127 down to 105 in just 4 sessions. It could have a bounce. I don't know if I want to play these bounces for intermediate term, but as real quick bounces, I would say that I would buy strength, maybe the second green candle. I just wouldn't take a jab right now. I think they're still under tremendous, there's a conflict between the fact that any kind of cannabis has been in play for not thousands of years or 10,000s of years, thousands and thousands and thousands of years, right? So, but as an IPO, the MJ, which is your alternative harvest ETF in the cannabis sector, has only been in play, I should have put the date down, from the very first trade in December of 2015, 24.50 was the low. So let me put that in, and now I can go, I've got it, 24.50, and I said 2015. Okay, so now we know. It runs up to 45.40, 47% or something gain, and then, what am I saying? It doubles, almost a 90% gain, and then it comes crashing down, and it goes to 203.01, has a big bounce to the 39-ish area, and now it's trading, the low today is what it was, I say it was 19.36. It's getting closer to at least attempting. I just wouldn't be, right now, I don't think it's necessary to be a hero, because in one day you can lose more than you would make over a 3-week period. So just be careful, that's all. So that's that, and I want you to look at the IYT. I must go into this a little more carefully. It says, gosh, where did it go? It said, there was a very nice statement, and I thought, oh, I better check this one out. Wow, a lot of emails here. But the one I want you to look at was a comparison. It said I see 1929, I stop and I read it, always. I even collect things from 1929. There we are, 2019, 1987, and 1929 analogy with a transportation index. Okay, I will check that out right now, and I will do a bit of a study over the coming days, because I have been considering that it is important to keep informed about the IYT, the transports, as it relates to what's going on right now. There's that H pattern in the monthly chart, but it hasn't really taken out 176.48. It's down 5.38, down 2.96. That's a big move. And but if it starts to trade under 172, then I have to think about an analogy. I still think that this is the quietest bull market we've ever seen, and that we will not make the major top until we get everybody and their uncle and their foreign cousin. That's the whole importance about this, is that when you get people in other countries starting to buy American stocks, that's when you got to be very careful. And we haven't even, not only haven't we got close to that, I mean, we're not even we haven't even arrived at Fenway to hit the first ball. So it's going to take a long while. And that says to me, I've got to start, I'd said back, I was one of the first people to say that I believe Obama will be president. I also said I think he'll be president for one term because I looked at the economy at the time. But then I'd said if the Dow closes in October of 2012, was it? Whatever it was, above 12,000, he will get another 4 years. And it did, and he did. But I'd also said, after Trump, and I'd anticipated there was a chance that Trump, because it was matching the whole scenario that I was looking at, the 1920s, the 3 Republicans, with Coolidge, and then Hoover was the one left holding the bag. I'd say we've got to be looking at this in a different way, because you've had your black president, an icon. It's an iconic move, originally coming from South Africa, as something that I had to talk about in terms of what I witnessed back in South Africa. So it was an iconic move. And at the same time, it was a completion of a move, I'd said. You remember, I discussed it. I had a whole session once that I discussed it as I said if I was putting a notation to it in the ChapmanWave, this would be peak F, because after this, it's equal footing for everyone. And that the next person, in terms of the Democratic nomination, if Hillary Clinton doesn't get it now, a woman will be for later on. And that's just the rotation through these different social programs. And this is just the way it works. So we're going to be looking at, I'll start talking politics in about a month or two. I don't think it's too early.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back, and finally we can get Scott on the line. Scott, how are you? Hello, Scott. He's back? He's not back? He's back. He's back. He's not back. God, he's back. Scott, if you're there, just give a yell. I'm sorry. I know that you tried to get in. I did see you, but I'm not sure why I couldn't get you. Okay, so let's just do this. I want you to do this quickly because there was a technique that I used to use years ago where we've got a 2-in-1 session. What is the 2-in-1 session? It's where the noontime price gets doubled either on the way up or on the way down. You don't want to see a 500 points, 587 right now. At noon, it was not quite that. It was 460, I think it was, to the downside. Just, well, that'll get us to a washout quicker, but it'll also take out really important support levels. I was showing you the Dow Quartet. I said IBM was holding actually not bad, but it still was a very weak stock. It's in the lower range. Triple M, look at this, Triple M, 123 right there. Look at that massive move now, making all-time multi-year lows. UTX, same thing. These are cyclical, deep cyclicals. UTX is right on the 200-period moving average of 129. You know, this is not good. This is just not good. That's the reason why we're in short and taken off most of our long positions in the newsletter, is that things were just not looking good based on that whole top information. So I have to say that I just want you to be real careful. We've raised a lot of cash, and that's just the best position to get in. I mentioned there recently that you'll get your prices. I'm sure if you're looking at stocks that you've loved, just have patience. Put in a silly price at the bottom. Put one that you think is fairly reasonable, much lower down, and then just one crazy one in case it's some kind of a crash type thing. But just be careful. That's the most important thing. And if you've got stocks that are really good and you love them and they still looking good, then just try to manage the trade, have patience, that's all. I do believe we will go to all-time highs based on certainly got to get a leg D in the ChapmanWave in the monthly charts. I'm worried about this particular phase right now. So a couple of things I want to look at just as we were about to go out. I'd said the VIX index, it has to start pulling back into the low 19s. Now it's at 2133. Just had another burst of the upside. Has to get back into the 19s with the Dow rallying to be only about 370 points down by the